afternoon, everybody. Welcome to TraderMerlin Show for your weekend edition, Trading Week Wrap-Up. That's what we like to call this session. Hope you have a fantastic day out there. There was a ton of opportunity. I hope you capitalize on it. I have a lot to talk about I had questions on bull traps. I'll also talk about bull traps, talk about bear traps. We'll talk about a wide variety of viewer questions and going into this topic to start the day. But before I do that, let me just give you guys a cheers to all of you. I hope you, again, had a fantastic week and ready for a great weekend. All right, let's go look at this graphic right here. Some of you might recognize this as the blue screen of death. When you see this one, it's like, oh no, man, my computer's messed up. This is going to be a nightmare. Well, thousands of computers around the world experienced this in the last 24 hours because of an issue with a company called Crowdstrike. And normally this wouldn't really, I guess I wouldn't draw too much attention to it because whatever, updates happen all the time, but it's just the caliber of businesses that Crowdstrike is in. It's like 8 of the top 10 banks out there using it, and healthcare providers, all airlines, etc. So having a massive impact. Now, this is going to sound cold-hearted. I don't particularly care if it slowed down operations, delayed flights. It didn't impact me directly, except on my trading platforms. They were cautioning me. You guys might have seen on Schwab, they shut down for a second, like, oh, we're having some problems here. That was brief, and everything worked fine when I wanted to trade today, so that's fine. However, from my perspective, as we've talked about this a lot, is when you're looking for a buying opportunity, what you want is you want that moment where everybody is panicking. And CrowdStrike had that moment today. So let me start today. We'll certainly go through a market overview and run through, but I want to do CRWD. And here's CrowdStrike's week. Some might call this the death candle. I mean, that is just a gigantic bearish move to the south side for this week, and most of it coming in the last 24 hours. All right, you can see this big gap. Let me get the volume off of there. Let's get volume out of there. And there you go. Huge down move today. Unfortunately, it didn't come right into an area of demand. I actually was trying to sell puts on this one today to literally catch that falling knife. I had the $260 strikes out, and I also had the 280s right at the end of the day, and neither one of those got filled, unfortunately. A little disappointed because the premium, as you can imagine, was off the charts. Like, people were absolutely panicking. Now, notice on this chart over here, this is not a great demand zone by any stretch of the imagination, but when I look over here off to the side of this chart, you can see that there's been a point right around 289 where it fell off, and I was kind of anticipating it going down further. So I held off on selling my puts, and unfortunately ended up chasing it as it kind of bounced back up here and didn't get filled on either my 260s or my 280s, which was really unfortunate. I was able to sell the 250 puts expiring July 26th for 250. Yeah, and that's what I was looking for, Steve. I mean, come on, you're going to get yourself a 1% rate of return for a week, and in order to get there, it's going to have to fall how much? Well, let's do the math. It's going to have to fall, let's see, there's 250. They have to fall another 18% to get to you, and you're already collecting a 1% premium on it. That's a pretty good deal. Now, granted, what's the risk to you, Steve, and anybody else who may have taken this trade? The risk is that there's further fallout from this. And from my understanding, the patch was fairly quick in coming. So some of these systems are down, but CrowdStrike certainly did everything they could to get it back up and running quickly. I saw the statement from the CEO. All in all, is this going to be a long-term thorn in the side of CrowdStrike? I don't think so. I really don't think this is going to be a bad thing for I mean, it's a bad thing because shareholder value diminished so much over the past, well, let's just say 2 weeks. Most of it happening in the last 24 hours, but I'm with you, Steve. I'd be fine owning CrowdStrike. I don't think they're going to disappear and fall off the planet. This isn't like the end of CrowdStrike. Does it open the door to competitors to maybe potentially look for alternatives to CrowdStrike? And I think that may be a true statement there. But I mean, look how much it's fallen since this peak. Obviously, it was down 11% today. But if you go from the peak to where it closed at today, in the last 8 trading sessions, you're talking CrowdStrike down 23%. Oliver says it was best not to trade today. Well, I made a couple. I'll tell you about some of those ones in a minute. They're too huge. Yep. They're still the leader. Exactly. And I think that's that's part of the reason that I was so interested in it today. I'll be honest, I'm very disappointed I did not get either of those two strikes, the 260s or the 280s. I was going to do the 280s for next week as well, but you had much higher premiums, obviously, because I'm going a much higher strike price. It was, I forgot what exactly it was. Was it $5.80 or $6 for premium for next Friday? And I was just sitting there watching. I was the best ask. I was the guy trying to sell these puts. I was the best ask, just waiting and waiting because the spread was pretty wide on them, and I just didn't get filled. Frustrated. I literally waited right down the last second and still didn't get filled on my strikes on that. So, for anybody looking for value, and I mentioned this one before, if you're buying a company like Siri, which you guys know my thought on Siri, I'm not a big fan of Siri. I just don't really like the product. I know some of you use it, but for me, I'm like, meh. So if I saw Siri drop from, let's say, $4 down to $2.50, I probably still would say, nope, not interested. However, when you look at a company like Crowdstrike, which is pretty dominant in what they do, things like Snow as well. Snow is looking like a great buy right here, although a lot of my tech friends are telling me that there's some serious problems with Snow. They do have a lot of high-profile clients. They do have a lot of major names under their belt, although there was a security breach, and now Snow might be suffering here going forward. But if you're buying a value name, your JP Morgan, if something comes out and there's a data breach of JP Morgan and it drops 20% or 40%, I'm probably going to be looking to buy that thing. Marcus says, I will not pay for radio. Neither will I. So I think you're probably going to be good on that one, Steve. I will have to live vicariously through you on the CrowdStrike puts because I did not get filled. I'll be honest, if it sells off more next week, which I don't think it will do, but it could, if there's further fall off in the weekend, you may see lawsuits. That's always a potential, which could bring it down further. But I think going out 7 days, you're fine playing that difference. That mistake shaved $8 billion off, I know, right? Whew. You know what's a billion here, Ed? A billion there? Meh, no big deal. Who cares? No big deal. Yeah, that is pretty crazy to think, but this is, one of those charts I look at. It's like, all right, I'm okay owning that thing, particularly when you look at that long term. Here's CRWD again. Yeah, just a little bit disappointed I didn't get into that bad boy. Oh, well, I think you got a good value buy here. We'll see what happens over the next week. Steve says, if it does, I'll be selling more. Well, remember, don't go too overboard, right? While I'm looking at it very objectively and trying to look at the pros and cons of it, I can't imagine there being a bigger fallout than what they've had from this, other than lawsuits coming in about the, upgrading the system and having flaws in it. That's not a good look for CrowdStrike, let's be honest. But mistakes do happen. So hopefully they will be able to window dress this one, calm their customers down and say, look, that was a one-off mistake. That won't happen again, and we'll do better checks on our security systems before we implement new software upgrades like we did. Kind of surprising, but man, isn't it interesting how dependent we are on technology? And one little glitch, one small upgrade, we always just click the upgrade button, just shut things down across the board. That was pretty crazy. All right, what else did I have? I had my graphic here for CrowdStrike, but let's see, that was this one here. Oops, there you go. That was my graphic for today's show. So let's move on from CrowdStrike, and I want to do I'll do a couple of listener questions here, and then I'm going to go into the top 8 markets as we usually do, and I'll walk you through a couple of the trades I made and some of the options expiration I had. All in all, it was a pretty dang good month for me and week as well. So Scott says, would you call this week's candle on gold a bull trap? How do you know it's going to be a bull trap? Well, I wanted to have a little bit of fun with the graphics, and I tried to have it draw me a bull trap. This poor little bull here, poor Bubba. I don't know if it's quite a trap, but it's an interesting picture that Midjourney tried to create for me. First off, for those who may not know, what is a bull trap or a bear trap? You never know what a bull trap or bear trap is before they happen. It's basically a breakout trade that fails. So in the case of gold, we were looking at gold. We're looking at sideways consolidation, and I was of the opinion, hey, if we break out, we might retest and then see a continuation of the upside here because the momentum on gold is so strong. However, there's a dark cloud looming, which is inflation. And if inflation keeps dropping, the urge to go to inflation hedges like gold start to diminish. So let's go check out gold. I'll bring up the futures out here. Bam. And this is not the weekly, which, what's his name, Scott had asked for. This is the daily, but you still see the same picture. We had that breakout, right, on Tuesday. Wednesday continued on up and then came back and retested it. And then today just gave up the ghost and was down pretty handily, 2.33% just today alone. If we switch this over to a weekly time frame, you see a more ominous looking picture, which I definitely would call that a bull trap, but I don't know it's going to be a bull trap. It's one of those things it's after the fact that you can say, oh, it's a bull trap, right? It's kind of like, there's a lot of other patterns there where you can say, oh yeah, well, that's this because of this. So for example, a double top. We can all call a double top when they happen, but a true double top, when you say it's a double top, that means it's reversed and already going the other direction, because a double top is a reversal formation. A double top could become a triple top or a quadruple top, whatever. So a lot of these things are after the fact. And yeah, certainly that was a bull trap after the fact. Now, if we look over on other things like this one right here, this is the dollar index, which broke down below that demand a couple days ago, and we ultimately had what would be known as a bear trap. The bear looks a little bit more sad. I don't know, they both look pretty darn sad in these pictures, so we'll say that. I don't know what kind of trap that is, but that's Midjourney's idea of what a bear trap might look like. Well, look, we had this tiptoe down below this area of demand, and I can certainly identify this more detailed by going to the daily time frame here. And you can see the justification for it. You know, back here is when that zone was drawn back on April 9th. And we've hit it 1, 2, 3, 4 times we've been into that zone. And then on Wednesday, we knifed through it. And it's like, okay, well, here we go. We should go ripping to the downside here. Well, unfortunately, it didn't. You had this, it looked like it got people in short here. And I'm sure a lot of people that were trading the dollar indexes were looking for weakness on dollar denominated currencies. And all of a sudden that about face. Today we were up 0.18% on the dollar index, but that's, bull traps and bear traps happen all the time. And the trick to all this is not to get hung up on it or worked up about it. The reality is we are going to plan trades, whether they're breakout trades, retracement trades, mean reversion trades, supply and demand, whatever type of trading you want to do, you're building a plan, right? And I know many people here don't trade the way that I do. That's great. I don't want anybody to trade the way I do. I'm going to be unique. I know Margaret and Wolf and Eb, you guys are trading your own personal style. You've derived that from other people's interests or teachings, and you've molded it to be yourself. However, I'm pretty sure that in order to establish your success, you're looking at entry, stop loss, price target. Stop loss being critical. So we all have to have those pieces in place in case we are wrong. So in the situation like today, or let's say the last few days, if you bought that breakout on gold, you better be stopped out right now. I mean, depending on what your risk tolerance is, because for me, if I was buying this breakout right here, let's say I went long on that breakout above that yellow box, right? Boom, I'm long. All right, looks good. And all of a sudden the next candle comes in and looks like this, like, I'm going to put my stop loss just below the top of that yellow box. I'm using that as the breakout, the retracement going to hold me there and act as a demand zone now that it was supply, now becomes demand. And then all of a sudden, it broke down below. Okay, fine, I was wrong, big deal, move on. But if you don't set those rules, a stop loss on a breakout trade or whatever, this could happen. And now you'd be down significantly, particularly for trading these gold futures. I mean, you'd have a pretty big loss in your hand today if you rode this thing down over 2.33% just in one day alone, not including the downside from yesterday. So, Crowdstrike, push the button. Don't push the button. So is yellow box still valid because there is no close above it? In my opinion, it's a great question. Love the question, Margaret. This is my take. Absolutely not. Yellow box is no longer valid. Why? Because I'm using this yellow box. Which one are we talking about? You're talking about gold, I believe. So let me go back to, I think you're talking about the gold chart. Let me know which one, Margaret, and I'll go more detailed explanation. But if you're using a graphic like this, and we now have that peak here, and you can see it kind of respected it a few times. Now that it's out there, this box goes away. Now I can redraw it at another point, but because we've breached it, whatever supply was at that high is no longer there, right? You've gone through it. So yeah, that one's gone. Now let's go to this dollar index one. Is this yellow box still valid? The answer is absolutely not. Right here, it is, because we have not breached it. Now, as you guys know, the way that I look at it, we are bouncing off this many times. And I believe if you look at this yellow box I've drawn as a concrete sidewalk and think of price as a jackhammer, the first hit, no big deal. The second hit, okay, that's, getting a little bit, taking away some of the strength. The third, the fourth, the fifth, the sixth, the seventh, the eighth, the ninth attack at that level, that's taking out buyers. Ultimately, this is going to break. And that's what typically will lead to a bigger move to the downside. In this case, it was a bear trap because markets just ripped it right back up. Now, to Margaret, going back to the GC here, yeah, we didn't get a close above it. Actually, we did get a close above it. If you put this top dotted line I have right now is where the top of the yellow box was, right? Is the peak here on May 20th. We did actually get 1, 2, 3 closes outside of it. But even if we didn't close outside of it, oh, you're talking on the weekly. Okay, I'm sorry. Even if we didn't close outside of it, this tail went through all the sell orders, right? The only way that tail could have gone up that high is if it exhausted all the selling orders, right, Margaret? So if I'm relying on those sell orders to stop price and push it back down, they're gone. Now, maybe they just canceled their orders and let it fly up knowing they were going to sell it back later. That could be as well. But for me, psychologically, that level is now void, and I will look to draw a new box if it's going sideways or trend lines or, supply zone. So for me personally, that level is no longer valid, gone. And again, different strokes for different folks. If your rule is it's got to close outside of it, cool. I mean, what does that mean for you? If your rule is it has to close outside that box, let's go here and make that range again, then you still have sideways trending action. And you could, if you wanted to, go back and start doing spread trades on this. But for me, using that peak there at 2,454 as a supply zone, gone. I'm not going to use that one again because it's breached through it. Now, if it rallied up and hit it and then came back down, I'd still respect it. Remember, the whole point of supply and demand methodology is to look for unfilled buy or sell orders. That's the gist of the whole thing. All right, cool. Hopefully that answered your question there. Steve says, I will take zones 2 times, nearly 3 times if there is a really good reaction out of it. Never more than 3, just me. And Steve, like I just said, it's every person's different. I'll continue to take it, but let's do a play-by-play on a daily of the dollar index. I think that's probably the best one visually right here. So let me go back to a daily on this one and just go forward, right? And I'm going to tell you what would my brain be thinking? How would I react to this? So here we are, hard right edge. And guys, this is a great game to play. Great game to play for yourselves, just to learn patterns, learn price, and just quiz yourself on your understanding of markets. If I'm looking for a retracement in this dollar index at this time right now, and for those in the podcast, I understand you can't see the charts. My apologies. I'm looking at a really nice up move on the Dixie dollar index that started on April 9th. And it was a small spinning top. April 10th, you had a huge green candle, and then it just continued to rally. So let's say you looked at it on April 16th, and it's already up significantly. If I'm looking to buy into this, well, this is a very logical point for me to look to buy back into, is that demand zone that started this whole thing. So now I'm waiting. Nothing going on. I might have limit orders just sitting there waiting, and all of a sudden, I would be very happy on, what's this day? On the 16th of May. Why? Because on the 16th of May, it came ripping back down. It just tailed, just a tiny little tail into the zone, and then bounced out. Great. Now, how you manage this trade, that's a totally different discussion. That's not the point here. But at that first touch on May 16th, love it. I am happy to take that trade. Can't wait, right? The grand scheme of things, we're in a nice little uptrend since, the December lows, and we're making higher highs, higher lows. Love it, right? Now all of a sudden, it comes back down on June 3rd and hits it again. If you look at this, my attitude has changed. It can't be the same for a couple of reasons. Number one, it already hit the demand zone, so it's no longer fresh. Number two, it's the second attack with good momentum, and notice when it bounced off this demand zone the first time back on May 16th, it did not make a new high. So this implies weakness to me. So this is the ball that's being bounced, and it's getting lower and lower. Well, that second attempt here, I'd be okay to take it, but I wouldn't do it with big size. I'd be a little cautious. Oh, and it rallies up again. Great. And now all of a sudden we come back down for the next attempt, which happened just a couple of days ago on the 12th and 15th of July. At this point, I feel a little bit better because it did rally up and make a shorter term high, but it's coming back down. It's just chipping away. So if I had a dollar, if I was trading dollar futures, I'd have been totally fine shorting on a breakdown below that because I felt like that area of demand has been weakened out, and all of a sudden we get that pop back to the upside, and everyone goes, oh, it was a bear trap. Well, you only know that after the fact. And if you look at this chart, it really did feel like this thing was going to go fairly unencumbered all the way down to that lower area of demand right around 102,666. So that would have been a 1% slide. Trading dollar futures would have been a pretty nice chunk of change for you. So Margaret says, so did Dixie have a false breakdown below your demand zone because it moved up again, bear trap? Yeah. So again, I have to delete this zone. And I have no problem doing that, right? Boxes can come and go. But now I need to reevaluate where are the key levels for these different markets. I personally love to have little yellow boxes. You guys know how I like to look at things. But yeah, that one's now gone. So gold's sideways box is gone. The demand zone in the dollar is gone. And now you're left with a couple fewer road signs, if you will. Right? Those demand zones or channel boxes are designed to kind of tell you where the playing field is. If we looked at that gold chart, it was pretty clear. We were bouncing back and forth in that range. Awesome. We got the breakout. Typically, if we go sideways for a long time and get a breakout, you usually get a pretty nice move to the upside. In this case, it didn't happen. We only had 2 days of up, and now all of a sudden creating back down. Let's see. Steve says, that's a great way to evaluate a trade after the fact. Teach them. Yeah. So one thing I would recommend that you do is don't trade something you know well, because your mind will go, oh yeah, I know it bounces here. Oh, and you're like, yeah, see, I'm a great trader. Pick something that you don't trade. So for example, I'm gonna type in a symbol and I'm gonna scroll over to the right. So I don't trade this ticker symbol, SWKS, Skyworks, right? I don't trade this one. So I'm gonna look away and hopefully I can slide my screen over. All right, and now I'm back to November of last year. Now, unfortunately, I'm also biased right now because I know what happened starting in October of last year. I mean, it just kept on ripping. So I would be lying if I said, oh, I'm going to go short here because of downtrend. I know it's going to rally up. So we're kind of biased there because we know it's going to move up. But let's go forward here and move to a point where we don't really know what's happening. So here you go. Now I've got Skyworks Solutions, and I'm looking at middle of April. And this for Steve and others is how you should play the hard red edge. Pick something that you don't know and just kind of click forward one by one and make decisions based off of that. And you're like, okay, well, this is coming back into supply. There's a shooting star. I'm going to look to go short if it breaks a low. Oh, well, we missed that one on an earnings play. Maybe I'm buying a demand zone. So do it on something you don't know, so you remove your preconceived notions about it, what you see in the media. Pick something and just learn how price operates that way. Make it worse. August and September are usually the worst months of the year for the market. Correct. That is true. September is the worst market of the year, worst month of the year from a percentage return perspective. I meant to look that up for you guys because it used to be that September was the only negative month. Only negative month. And I believe that is now a positive month because the last few years have been just so robust. It's brought that average up, but it still is the worst performing of the 12 months. I always test my trade setups on other futures contracts that I didn't trade. Good. Well, I mean, the whole goal is really to get yourself comfortable with your trading strategy, with your trading platform, and be honest about how you trade these things. That's one thing I love about doing this show for you guys is I'll go back through and I'm going to give you my honest evaluations of trades. Am I wrong a lot? Yeah. You guys have, you can call me out on it. It's fine. But you got to give credit where credit's due sometimes. That's nature of the beast. I have no problem being wrong. I'm willing to admit it because I got a stop loss in place. All right, let's go to... This is a question that came in from ABD. How much time we got? We have another little sip here. And this was per the discussion we had the other day about when Larry was on the program about politicians not being allowed to trade. And it's kind of a long-winded question, but let me read through it because I do think there's some valid points I want to make sure I get some clarity on. ABD posted on the YouTube page. He says, but don't you think that if politicians are prohibited from trading and investing, that also keeps many of the brightest at bay, and we will end up with a situation when only unable to go into public politics because you have to choose between building your best egg, you mean nest egg, and serving your country. Before I go any further, I think that it's very easy for people to achieve both. Now, I don't think that politicians should be banned from trading and investing. What I do believe is there should be a method or methodology for them to invest in broader markets. So what I would say, if I had to make the rules, is a politician cannot invest in a specific company, because then you could open up the bias to benefit that company. What they could do is invest in ETFs. So maybe we give them the 13 sector ETFs or 11 sector ETFs, how many there are now, and just use that as their pool to buy and sell. More importantly, a politician should never be allowed to, under any circumstances, go short the market or buy directional puts. Could they sell puts? Yeah. Could they sell calls? Okay. But no way should they be shorting this market, particularly an index, because that means they think the markets are going to go down, and then their job to make it go up will go out the window because they'll profit if it declines. So I think that should be a pretty clear law on the books, that any elected official cannot short the market, even using derivatives like options or futures markets. Forget it. Ban that one. They should be able to capitalize on the success of America, on the growth of America. Now, you might remember years ago, there was some politicians, we will leave names out, that credit card reform bill was on their doorstep. And they voted against credit card reform bill, and come to find out after the fact that one of the credit card companies gave them an amazing deal on their shares. So they got to buy at a steep discount. They voted against credit card reform, and all of a sudden, credit card companies took off and they made millions. That's a conflict of interest, because credit card reform is good for America. It's good for the average consumer like you and me. It's bad for Visa, MasterCard, American Express, Discover Card, you name it. It's bad for them, because those legal loan sharks will no longer be able to lend out money at 29%. If you look at the 30-year fixed rate mortgage, okay, let's round it up and call it 7% today. Maybe the law should be the maximum a credit card company could charge you is double the 30-year fixed rate mortgage. Okay? That's a little bit better in my opinion. At least it limits it, because, 29%, I think you'd all agree, that's usurious. That is absolutely usurious. And unfortunately, the people that carry balances are typically the ones that don't understand personal finance, which means they will never recover. They will never get out of debt. But if we tied it to, let's say, the 30-year fixed rate mortgage, right now the maximum any of the credit card companies could charge you would be 14%. I'm okay with that. Now, that should have been voted through. These changes should have been made, but our politicians were swayed by the credit card companies and lobbyists to vote against it because it would hurt the economy. That's not true. It would have hurt the businesses. That's the problem. So, long-winded answer to the first part of your question is, I believe that politicians should be allowed to trade and invest. I think that if they can invest in a single company, that might represent a conflict of interest, because they could do things to benefit that company. But if they're going to do something to benefit an entire sector, right? Let's say, for example, I'm making up a hypothetical here, guys. Let's say that there is a proposal that we produce a semiconductor factory, a massive chip-making facility in half of the states in the United States. 25 massive factories funded by the government. And if 15 of those 25 are going to be, let's say, a Taiwan semiconductor company, right? A politician, before they voted on that bill, could have loaded the boat on Taiwan semiconductor. That would be conflict of interest, in my opinion. Could they buy SMH, which has Taiwan Semiconductor as the major holding? I would feel better about that, because now they're diversifying and the whole market sector would be moving up with that, not just one company. So I know it sounds kind of odd, but I do believe that you should be allowed to do it as long as it's kind of diversified and spread out. There should be rules on it. I would kind of prefer it be done in a blind trust, but let's be honest. Does anybody here believe in a blind trust? Anybody here believe at all? What is a blind trust? A blind trust is, let's say I'm Senator Pelosi and I put $1 million into an account and they just invest it for me. And I have no contact with them at all, no sway, no influence, whatever. BS, come on, man. There's no way. So I don't trust a blind trust at all. What I think should happen is I think we should implement blockchain technology on an exchange level, so pretty much using what JP Morgan's blockchain is, Onyx, and use that blockchain with a public interface that in real time I can see Nancy Pelosi's holdings, I can see Ted Cruz's holdings, I can see Donald Trump's holdings, I can see Biden's holdings in real time. That should be mandated, in my opinion. If you don't want to have your personal financial trading accounts open to the public, then don't run for office. Because you already know you're going to have a competitive advantage when it comes to moving the markets. So I'll be honest, if I was an elected official, I'd be fine. Open up my accounts to the world for them to see. And if you want to piggyback on my trades, assuming I'm going to be right, go for it. So yes, let them trade. Let's see what else. Hopefully I didn't stir up things too much here. Let's see. Wrong. More than I am right. Let's see. Margaret says they retire and get highly paid jobs as news analysts, CNN, Fox. They write books. Yep. They also get invited to join the board of directors of big companies. Absolutely. And no surprise. That's okay. You know, they're going to have to make money somewhere. Who's that politician? Pelosi. Yeah. But again, I don't want to single her out, okay? Because I know I'll have some people who are going, oh, these Democrats are all crooked. Guys, this is universal. There's actually a tracker that showed that there was more of this type of stuff done for Republicans than Democrats, but it's guilty on both sides of the aisle. Hell, I'd even say libertarian elected officials are doing this thing. I think Margaret pointed out earlier, these individuals are going to go in there to make money. Now, in a altruistic world, I would hope that their primary number one concern is for the betterment of America. I don't think that that's the case. I think most of it's like, hey, how can I capitalize on this position and put myself in a much better financial situation going forward? And look, all of us are doing that in our day-to-day lives as well. But they're just in a much more influential position to do so. Okay, let's see what else I have here. This just all don't have a credit card, paid cash for everything. Oh, okay, Steve, we need to talk. So Steve says, I'm 56 years old, don't have a credit card, paid cash for everything except my house. You need to abuse the system, Steve. Everyone here, abuse the system. These credit card companies are screwing over most Americans. What you need to do is flip the tables. And I've already mentioned this before. I probably have a picture on the desk of the loss prevention department at credit card companies. And I'm like, oh, it's this guy again. And I'm teaching everybody to do this because you should be doing this. You should set up one account at your local bank, Chase, Ally, whatever, and use that as your hub for everything, right? That way you have it all in one central location. When you have it in that central location, I want you to go and find out, and this is for Steve or anybody else, you find out what's important to you. What do you like to do? If you like to travel, get yourself an airline card. If you like to stay in nice hotels, get a hotel card. Get a points card. Get something that has a rewards program tied to it, hopefully for with no annual fee. Then what you do is you take your credit card. So for example, I just got a new United card. I typically roll them every 11 months. So I've got this United card. I get 70,000 miles, which is a free domestic airline ticket anywhere in the US. At 120,000, I get a free business class ticket anywhere in the world. So what you do is you use that credit card for everything. You buy a pack of gum, pay for it with a credit card. Link it to your checking account, and you make sure, I have apps on my phone, you just click a button, pay in full every month. Therefore, you'll never pay 1 cent in interest charges. And what you're doing is you're borrowing money for 30 days for free. As long as you pay it in full. So just make sure you pay it in full every month. If you know that you've got $1,000 in your bank account, don't spend more than $1,000 on that card. Never carry a balance. Now, you do that over and over again, all of a sudden, you're taking money away from these credit card companies. You are literally causing them to lose money because they're paying for all the resources for you, all the admin, all the accounting, and the cards, etc. And you're also getting points, services, airline miles, etc. Steve, get a credit card. Not only that, but it will improve your credit score significantly by having multiple credit cards. So I think now I have 5 or 6 different credit cards. I usually roll them again every 11 months, which does hurt my credit score. Let's be clear, but it only drops my credit score a point or 2, right? I'll get a new card every year, maybe 2 cards. But if you don't carry a balance, meaning you pay it in full every month, there's no harm to you whatsoever. It's actually beneficial because you get perks. I've got right now a business class ticket anywhere in the world I want to go. For anyone who's flown over 21 hours, you understand how important business class is on a 21-hour flight. Man, it's a big difference. Thanks. Let's see. Big Ed says, I hoteled in Italy for 2 weeks and first-class airline ticket on my credit card points. Boom. That's what I'm talking about, Big Eb. Absolutely. And for Big Eb, he had to buy business class tickets, which first off, To Italy is only 12 hours because Big Eb, you're in Southern California. It's a 12-hour flight. That's great, but when you really enjoy it is on when you fly to Asia, Thailand, Australia. 21, 22-hour flights, man, and you can go full horizontal and sleep. The lady comes by with a cocktail cart, and she's like, what would you like, sir? And you're like, can I get a Manhattan? And she's like, oh, which whiskey would you like? Oh, Woodford Reserve. She's got a shaker and everything. Whereas you fly coach and you can't lean your seat back past 5-degree angle. The guy next to you is snoring. The baby next to you just threw up on your lap. And now you have the woman throwing drinks at you that are $13 a piece. Forget it. Go business class. Sorry, Big Eb. I just embellished on your trip to Italy. Mi dispiace. Dave says, they charge the vendors to use their cards to pay the rewards. Companies don't lose money when we do that. A company will lose money because when you use your card, there's a 3% transaction fee for the business, typically, right? That's typically. What's your opinion of cashback credit cards? I'm fine with that. I'm fine with cashback credit cards. I mean, think about it. If you have a cashback credit card that saves you, let's say, 2% on all purchases, you've got a 2% discount on your life. That means that everything that you're doing now has a rate of return that's 2% better than it was before. Why not? The key is you cannot carry a balance. Don't ever let that balance go unpaid. Don't pay the minimum. Pay it in full. Okay, I'm done. Sorry, I'm on the soapbox now. Isn't filing bankruptcy a sort of way of sticking it to them? I mean, Trump did it and he's still rich. He did it through businesses, Blue Diesel, multiple times, and that is definitely a way. I don't know if it's necessarily a way of sticking it to the businesses. When a business does it, it's a way of sticking it to the citizens of the United States, because typically we feel the impact of that. But as a consumer, could you file for bankruptcy? Yes, but your credit will be tainted, and you won't be able to open up new credit cards for a while. It's an uphill battle, so don't do that. I wouldn't recommend filing for bankruptcy. That tells me that you had bad fiscal responsibility and you couldn't handle your finances. Not good, right? I've got a Costco card, cash back, and gas and stuff. Yeah, there you go, right, Glenn? You're getting something for free. Just don't carry a balance. All right, I went long-winded on this one. How much time I got? Plenty of time. So let me get to the second part of this. So I want to serve my country, but why should my kids suffer? Why should my parents suffer? Why should my spouse suffer? So I end up serving to help other people to build wealth, to do better in life. And at the same time, I'm prohibited from doing better for myself. I'm not saying that these politicians, their kids aren't suffering. Their kids aren't, the parents aren't suffering. You went to an extreme here, which is unnecessary. We're not saying that these politicians are handcuffed and can do absolutely nothing. What I'm saying is there should be better monitoring of what they can do with limitations so that they don't do, in my opinion, anything that is a conflict of interest. And number two, conflict of interest for America, which to me, that's one I just don't understand, is how they can short the markets. If you're the president, if you're the VP, if you're a senator, you should absolutely not be shorting the market, or not be allowed to short the market, because that means you don't believe it's going to do better. And they should always believe the market's going to do better. You look at Pete Rose, right? Pete Rose, you guys may know Pete Rose. Pete Rose was one of the best baseball hitters in the game. He is a legend, and when I was growing up as a baseball player, I idolized him because of how he taught how to hit. And I had a really high batting average when I was younger, really high, because of the way he taught. He bet on his team to win. Pete Rose never bet on his team to lose. He bet on his team to win. Let me ask you guys, if you were a coach and the bets were, and you had players that were betting on your team to win, would you be upset about that? Or would you be like, right on, do it? You guys tell me. Would you want your players to bet that you were going to win on your team or not? I'll let you give a second to let that one digest for a second. But if I'm a coach of a baseball team, I want all my players to win. I want them to think we are going to win every game that we play. If I have a player who is betting on our team to win, that makes me feel great because they have confidence that we're going to win. And they're incentivized now. They're like, if we win, I get paid. Why don't let them bet for it? Politicians should be in the same boat. If our economy does good, then the ETFs will go up. If markets do well, their ETFs will go up. If the economy suffers and slows down, their portfolio will decline in value, and they're going to have to go back and review, how do I get this country back on track, right? Simple. Now, if I found out that my players on my baseball team are betting that we're going to lose, I'm pissed. I'm kicking you off the team. Now, I say that because we have politicians who are shorting the markets, and they're betting that the team's going to lose, right? So that's what we should be angry about, that there is that ability for them to go short the markets. Their job is to make this country better for you and me and everybody in it. So, yeah, I will stand by that viewpoint. Nothing you can do to sway me on that one. I believe that every politician should be doing what's best for this country, not themselves, but they should be allowed to invest, and they should be able to go long markets, broad markets, not specific companies, because then they could give contracts to specific companies, and that's a conflict of interest, right? If I'm a politician and I have 3 banks, let's say 4 banks lined up, willing to take this money, and I have to give it to one of them, well, here comes Jamie Dimon, and he's like, hey, if you give it to us over here at JP Morgan, I'll give you this, 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 and this. And Wells Fargo's like, well, we're not going to give you anything. Bank of America's like, we have nothing to give. And then you can say, here's Ally Financial, we'll give you this. Well, JP Morgan's going to win because I make more. That's wrong, right? That's wrong. It should be the best, most qualified that's going to do the job for the best of the country. Anyway, I'm going to off my soapbox. Sorry, guys. Good. Yeah, bet not to lose. Put your money where your mouth is. I agree. Man, I think every baseball player, every athlete should be able to bet that their team is going to win. But remember, Pete Rose is now banned for life from anything to do with baseball, which is a travesty. He really should be in the Hall of Fame. He's pretty amazing. They should only use call options and long the stock. I'm all for that too, futures. They should never be able to buy puts directionally. You know, selling calls means you don't think the market's going to go higher. So I don't know if they should necessarily be able to sell calls, but why not? If they own the underlier, I do think they should be able to sell covered calls. All right, so ABD, great comment. Sorry if I went long-winded on that one. We're running into a position right now that this ends up being the topic du jour, which is, oops, not that one, political uncertainty. I kind of said this jokingly a couple weeks back. After the debate, I was like, I don't know if Biden's going to make the debate. I don't know if he's going to make it to presidency, right? Nothing against him. I wish him all the best. But as for America, we can't have a leader that is just out there, spaced out, not knowing where he's at and shaking hands with inanimate objects. Now it looks like he may actually be stepping aside. That seems to be a very real possibility. There's a lot of pressure on it. And guys, why do we see these really choppy markets like this? Because we just don't know. There's political uncertainty. And I was actually happy that my mid-journey created 3 podiums here. Because I think that if we have a new Democratic candidate, let's say somebody comes in and replaces Biden as the candidate for the election this year, now that the Democrats are going to start to regroup, right? Like, okay, now what do we do? And now I think what you're going to get is a bigger talk track of, does this Democrat now have the potential to compete with Donald Trump, who, let's be honest, his popularity is surging right now because of what happened. He's gaining a lot of support from people who are on the opposite side of him as well. Does this open the door to having a 3-way discussion for president? I hope it does. Fingers crossed. I would like to see 3, maybe 4 politicians up there. I don't see a 4th viable option at this point, but we should always have more than just 2 people expressing the interest in what they're going to do for our country. So for the next few months, guys, more volatility. Expect this kind of whipsaw, bull trap, bear trap type stuff. I don't think that's going to change. So I think the trading is actually going to be fairly difficult going forward here through the election until we get maybe a clear understanding of who might be. My guess is we'll probably have within 30 days, I think we will have another Democratic candidate announced with and running mate as well. And we may get that third party. And when we get that, I think the markets will calm down a little bit, but there's still going to be a lot of volatility. So be real careful out there. I think it's going to create some challenges for us as traders, particularly those of you trying to do swing and longer term, could be rather challenging. Let's see what we got today. I try not to go political, guys. I don't want to piss anybody off here. What do we got here? A lot of pressure on Biden. I do too, Margaret. I don't think he's a bad person. I definitely don't think he's a bad person, but I made this point before. If we were supposed to retire at 65, I got an 80-plus-year-old man as the president running the biggest economy in the world, and it looked like he was kind of losing it. Not the right guy. Not the right guy. Yeah, shit showing the DNC right now. You're right, John. It absolutely is. I would love to be... I wish we could have like a nano fly to see what goes on behind these closed-door meetings at the DNC, because they're just like, what are we doing? I'll be honest. I've had politicians... Yeah, I won't go there. I'm not even going to go there. We'll leave that one out. I read that Trump is going to ask Jamie Dimon to be his... Yes, I read that as well, Bonnie. And that could very well happen. You could see Trump... And that would get him a lot of votes. right? Because Jamie Dimon is normally a pretty bullish person on the markets, and he has a lot of play, a lot of clout. That would be smart of Trump to use him as a weapon in his administration. Absolutely. Would it be the best move? I don't know. But certainly I could see that happening. It's really up to Jamie Dimon. How much money do you think he's going to make as Secretary of the Treasury versus running JP Morgan? Now, again, there's talks he's going to step down. He's got so much money. He has the proverbial FU money, right? He's got so much money it doesn't matter to him anymore. And maybe he'll do what's right for the country as a Treasury Secretary. Who knows? Get the popcorn out for that one. Definitely. Be like Dana White, speak your mind, oh boy. I hope so. When it comes to money, and that is as far as my comment will go. Oh, yeah, the Hulk Hogan one, that was pretty funny. That was entertaining to watch him. I liked Hulk Hogan. I was a big fan of his WWF, but there you go. But he would kill Bitcoin? Who are we talking about, Robert? Who would kill Bitcoin? Oh, Trump is pro-Bitcoin. Wait, Trump flipped on Bitcoin? Because his running mate now, I didn't see that if it's the case. His running mate is actually pro-Bitcoin. So, yeah, it's funny how he just flipped. Ramaswamy for Treasury Secretary? That could be as well. I think Ramaswamy had some, he's an interesting cat. I listened to him. I listened to a lot of different people. He was pretty good. All right, let me move on to this piece right here. I had quite a few trades that expired because it is the third week of the month, and I had a lot of options that expired, which obviously made for a great week, or a great month and week, depending on which options they were. Some of them were actually pretty close. So I had, let me run through. So I had Rivian. You guys know I had a couple thousand shares of Rivian. That thing screamed out. I had the $12 calls against my position, so we knew that was going to be taken away when this one started to rip to the upside. So that was a bummer. That's probably the worst piece that's happened to me in the last 30 days is watching Rivian just rip up as I'm holding 2,000 shares long, but I'm capped out at $12. But my average price, I believe I'm down at around 9 something with all the premium I've collected. So that was fine with me. I'll take $6,000 for that one. You look at, what else was it? I did American Airlines. That one expired today. I sold the 1050 puts. And man, so close. Look at that. 1058 was the closing price today. That was a good trade as well. Not a ton of premium, but I got well over 1% for about a week and a half. So I was fine with that one. I did sell Charles Schwab today. So here's Charles Schwab. Let me put a line on the screen at the strike price just so we can have that one on here. And I got fairly close to where we're at. You look back here to this tail that goes all the way back to January 17th. This is not a strong demand zone. I do like Charles Schwab long term. I think that based off their statements and cleaning house, getting rid of some of the double up riffraff from Ameritrade merger, I think you could see Schwab do fairly well. Now, it doesn't mean it's done falling, but I did these put options are for August. I did the August 16th. Collected over 2%. So I'm happy with that one. I got over 2%, and that's my strike price. I'll put a vertical line so I can kind of know when we look at this again that I have an expiration out there, and that is August 16th. All right, that was done today. As I mentioned, I'm bummed. I really am disappointed that I did not get the Crowdstrike, but I still have XOY puts, but I should dump those. Those are going to expire. And I'm finally in the money just a little bit on these, but I should probably get rid of this because they expire on the 16th, and I'm long those puts as well, so I went directional on this one. XLE expired on me today, so I had sold the $88 strike price. I think I talked to you guys about that one. Great, fine. I'll collect over 1.5% on that bad boy, and no worry about that. Now I'll have to reevaluate where I want to go. And I think that was a bulk of, that was it. So there we go. I have those ones taken out, and again, the one I just opened up was Charles Schwab. I wanted to get Crowdstrike, but I may do Crowdstrike again later on next week. Okay, I'm sweating up here. It's getting hot. Let's go look at what happened today earnings-wise, and I will go into your calendar for Monday. You certainly have a few on Monday, but you had Schlumberger report earnings today, American Express, Halliburton. Notice there was a lot of positive numbers here, at least on the earnings side. Like nobody on this top 10 here had a negative, nobody missed earnings. However, there was a lot of chop. You see, Comerica was down 10%, Travelers Insurance surprisingly down 7%, Halliburton down 5.6%. Of course, when the broader markets are negative, that's going to bring them down regardless of earnings. But that was what you had for today's session. Now let's go look at what happens on Monday, the 22nd. Here you go. You do have a couple okay names, nothing gigantic. You have Verizon Communications, you have Cleveland Cliffs for those of you looking at steel, you have Nucor as well, and that is your Monday session. For earnings, that was it. For your economic calendar, we had nothing in the U.S. today, but on Monday, come on. Oh, that was weird. That's kind of strange. Monday showing us nada. There actually is. Oh, no, maybe there isn't anything Monday. I don't know why it's not showing up, but click on that. Huh. Yeah, I'm not seeing anything for Monday. Okay, that's fine. We'll have to wait till later on the week, but I'll be doing a Monday morning must-knows on Sunday, so you guys can see that one, and I'll go through it. You've got all kinds of manufacturing and services numbers. You've got rate statement from Bank of Canada, et cetera, so a lot of big stuff going on next week, and I'll talk about that one as we get there. Let's see. Big Eb says, do you think drill baby drill has the same effect on oil today? I don't think it does. I don't think it has the same effect. Right now, I don't know the exact percentage of the strategic national reserves of oil and where we are with regards to filling that back up. I think that was the primary goal. But when we had oil up in the $90 range, it was interesting to see selling off those reserves. So timing the market from the government perspective was an interesting play. I think that drilling doesn't necessarily make more oil. You look at price right now is falling. The more that this drops, the less incentive there is for people to drill. But I don't think the drill baby drill is going to be that big of a deal. Let's see what else I got. USB record this week. Yeah, most financials were looking pretty good except for Schwab. Where has Wendell been? Wendell was on the show a week or so ago. I think he was on the program about a week ago. He's in transition. He's moving to Virginia, moving from Florida to Virginia, and I'm sure in transition he's just stressing into that, but maybe we'll bring him back on, and once he gets situated, he's on a 400-acre ranch or something, which is pretty cool. Merlin, I'll have to have my show put to me at 66, or SCHW. Would you get out at a loss here, or just add on at a lower price? At 66 on Schwab? I think it really depends on what your viewpoint is on it. So SCHW. So you're going to get it put to you at 66. Oh boy, that's tough. I look at the line of $60 as that line in the sand. So it's tough because if you sell calls against your position, so if you're long at 66, you've collected premium on it, and just so I can, be devil's advocate, when did you buy this? You didn't buy it before the earnings. You didn't sell puts before the earnings, did you? Anyway, I think that $60 will probably be that stopping point for it. If you are concerned, which I do think it could potentially go lower than this because they did give some pretty bad guidance, then you might want to just get out and sell puts again at a lower price. If you believe that long term you're going to be okay, then maybe you hold it and you sell calls against it and sell them out of the money where you're selling back at 66 if the premium is got put today if the premium is high enough. When open up unwind on the pipeline, bought a truck. Okay. Had some Trump comments? Yeah, well, but that's again when we go into the political parties, Republicans are definitely more oil, coal, drill, which that's neither good nor bad. That's just knowing the political parties go that type of route. So as we get closer, it certainly could have an impact. Now, if we have more businesses open up drilling, what's that going to do to the price of oil? Well, you start to look at more downside movement, and possibly that's what the result that you've seen here for today was. Right, you had a pretty big down day today in crude oil. That's $3.27%. And that might be people already anticipating that there's going to be a whole slew of new drillers coming on scene, and that could push price of crude oil even lower. But I don't know about that quite yet. We'll worry about that a little bit further down the road. All right, that's it. An hour show. As you can see, I'm sweating up here. I'm glistening. Not even the whiskey is helping me. Steve says, drill baby drill is fine. Where are we putting all the oil? We're about full. I don't think we're full on the strategic national reserves. Now, I think we're pretty low, actually. I know I thought they said like halfway through, but that's still millions of barrels of oil that we got to worry about. All right. Exactly, Big Eb. And I think you're right. And that might be why we saw a knee-jerk reaction today. And that's where you have to position yourself. If you believe that Trump will be elected president and follow up on his word and say, just drill, baby, Just drill. Go for it. Just start drilling. I'll reduce all the regulations and just drill. Yeah, we're going to see oil go lower, and that might be a play as well. But right now, I'm not going to position myself that way, even though it looks like he's pulling away with the probability of becoming the president at the election. Again, that uncertainty of who's going to even be in the Democratic Party is a wild card, and I wouldn't make that play just yet. Mine, baby, mine. Yeah. Why don't you use our own oil? Well, it's a different type of oil, so the oil we get here is different from what you would get from Saudi Arabia. But anyway, I'm going to bring on an expert on oil to explain all the differences there. All right, you're trying to get me to an hour show. That's not going to happen. I hope you guys had a fantastic day. I hope your weekend's going to be even better. Do something fun. Spread the love around the world. We need much more of it. I hope you guys do something fun this weekend. Email me if you have any questions, comments, things you want me to cover for next week's shows. That is going to be at TraderMerlin@gmail.com, which is on your screen. Or just put a comment down below any of the YouTube videos. I always appreciate that. And thank you for those that do put comments on there. Always is a nice thing to see. Anyway, thank you guys so much. And as Steve says, anything can happen in the next 4 months. Not only can anything happen, it will happen. It's all we know is just uncertainty from here on out. Even though you have a front runner at this moment, that could change in a moment's notice. Anyway, thanks guys. Have a fantastic evening. Do something fun. I will see you all on Monday. Take care, everybody.